Imagine waking up, checking your stock portfolio, and seeing that the market is crashing. Red everywhere. Your investments are losing value. What do? Do you panic? Do you sell everything? Or do you stay calm and strategize? In this video, I'll break down exactly what you should do when the stock market crashes, whether you're a beginner or an experienced investor. We'll cover why crashes happen, how to protect your money, and whether you should buy, hold, or sell your stocks. Let's get started. The first thing you need to do is understand why the market is crashing. Markets don't just fall randomly. There are always underlying reasons. Some common ones include 1. Macroeconomic issues. Rising inflation, interest rate hikes, or recession fears can cause panic in the markets. 2. Global events, wars, pandemics, or political instability can create uncertainty, making investors sell stocks. 3. Corporate earnings decline. If big companies report lower profits, their stock prices drop, which can bring down the entire market. 4. Market bubbles bursting. If stocks were overvalued and growing too fast, a correction is inevitable. So before making any decisions, research what's causing the crash. Is it temporary panic or a deeper financial crisis? Revisit your investment goals. The next step is to ask yourself, are you investing for the long term? If yes, crashes are just bumps in the road. Historically, markets recover. Do you need the money soon? If yes, you may need to shift to safer investments like bonds or cash. The key is not to make emotional decisions, but to align your actions with your goals. Assess your portfolio. Now, let's talk about your portfolio. Not all stocks react the same way in a crash. Blue chip stocks. These are large, stable companies like Apple, Microsoft, or Coca-Cola. They tend to recover quickly. Growth stocks. These are high-risk, high-reward stocks. They usually drop the most during a crash. Dividend stocks. These pay you even when stock prices are down, making them more stable. Take a close look at what you own. Are you too exposed to risky stocks? If yes, it might be time to rebalance. Avoid emotional decisions. One of the worst mistakes investors make during a crash is panic selling. Here's what you should not do. Don't sell just because the market is falling. Selling at the bottom locks in your losses. Don't buy aggressively just because prices are low. Stocks could fall even further. Stick to your investment plan. If you had a stop-loss strategy or long-term goal, follow it. Remember, Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. What strategies can you use? So, what can you do during a market crash? Here are 3 strategies. A. Hold your investments. If you own strong companies, they will recover. Market history shows that crashes are temporary. B. Buy more if you can afford the risk. Crashes give you the chance to buy quality stocks at a discount. Use dollar cost averaging, DCA. Invest small amounts over time instead of all at once. C. Sell if necessary, but be smart about it. If a company is on the verge of bankruptcy, selling may be the right choice. If you need emergency cash, sell only what's necessary. Choose the strategy that fits your financial situation best. Diversify to reduce future risk. A stock market crash reminds us why diversification is so important. You don't want all your money in one asset. Here's how you can spread your risk. Stocks. Keep a mix of stable and growth companies. Bonds. These are safer during downturns. Gold or commodities. Act as a hedge against inflation. Cash reserves. Prevents you from selling stocks at a loss. A balanced portfolio is your best protection. Review economic indicators. Keep an eye on key economic indicators. Federal Reserve policies. If interest rates are rising, markets may take time to recover. Inflation trends. If inflation is cooling down, stocks may rebound. GDP and job reports. A strong economy speeds up market recovery. Watching these indicators will help you make smarter investment decisions. Learn from this crash. Every market crash is a learning opportunity. Ask yourself, what worked well in my portfolio? What made me nervous or caused losses? How can I prepare better for future downturns? The best investors use crashes to improve their strategies. So, should you panic during a stock market crash? Absolutely not. Instead, stay informed, review your strategy, And remember that markets always recover over time. If you found this video helpful, make sure to like, share, and subscribe for more investing tips. Also, drop a comment below. How are you handling the current market conditions? Let's discuss.